Peace, everyone. Welcome to Winning Wednesdays for Wednesday, February 11th, 2026. Today is the best day in history. This thing is arguably the greatest invention in history. I press a few clicks on that supercomputer and I can do whatever I want. I press a few clicks on this supercomputer, buy back my time and live my life on my terms only. That's why I say today is the best day in history. So welcome to Winning Wednesdays. My name is Errol C. Mangle. Every Wednesday, noon Eastern, we discussed current events in the financial markets. I've got several articles I wanted to share today, but as you guys come in, let us know where you're from. Let us know where you're from. Let us know who we got. Let us know where we got. Who we got, where we got. Who we got, where we got. Who we got, where we got. Today we're live on the Black Boss YouTube channel. We're live on X, Dr. Boyce's X channel, and we are live on StreamYard. So we welcome everyone across all platforms. Interesting times in the market. I'm taking a look at the market right now. Mostly red. It's a great day to get wealthy in America. It's a great day to get wealthy in America. Okay. Let me see what's going on here. Let's see what's going on in the market. Okay. S&P slightly down. Total market slightly down. NASDAQ. Okay. So major index is slightly down. A few tickers I wanted to deep dive into while we had, before we start, I want to deep dive into a few tickers I have on my list here. I got my eye on. Very interesting. Very interesting. All right. Let me share my screen here. Let me share my screen. This is one of them right here. Apple. All right, let's take a quick look at what's going on with Apple. Let's see. Apple stock. Let's check out Apple stock right quick. If you lined up 3 days outside the Apple store to buy that new iPhone 35, make sure you own some Apple stock. Okay, so 278 currently. 278, all-time high right there in the middle, 288. Okay, Apple currently 278, all-time high 288. Okay, so about $10 off from its all-time high. Up almost 2% today, approaching 280. Okay, so Apple, if you bought the last 7 iPhones, make sure you own at least 7 shares of Apple. Okay, if you got that new Apple laptop, make sure you own a share of Apple. Okay, Apple, very interesting company right there. Okay, so that's one ticker I wanted to quickly discuss. Let me check the tickers I follow here. Okay, let's see here. AMD, another interesting one. Broadcom, another interesting one. I wanted to quickly look at Bitcoin. Let's see what's going on with BTC. Bitcoin currently at 66,000, down about 4% today. Bitcoin currently at 66,000. Okay, interesting ticker right there. Bitcoin, one coin going for 66,000 USD. 66,000 USD. All right, one more, then we'll move on. Let's see if I can Cisco. Let's go check Cisco. I've got an article on Cisco I wanted to share. Current price $85.69. $85.69. This year has done well though. Up almost 13% year to date. 37% the last year. Okay, so Cisco 52-week high 88, currently at 85. Okay, that's where Cisco stands. Okay, I have a article I want to share on Cisco. Let's go to that article right now. All right, let me pull this up correctly. I saw Cisco has their own chip now. I think it was CNBC mentioned they are now trying to compete with NVIDIA. Let's take a look at Cisco. Let's hit the news button. Should be right here somewhere. Let's see here. Thought I saw an article regarding Cisco making their own chips. Let's see if I go to all. Let's see what all says. Cisco's new G300 chip aims to boost AI computing speeds by 28%. Yeah, right here. Actually, it was this article right here. Let's check out Coin Central. Let's see if we can read this article right here. The AI chip war heats up. NVIDIA, Broadcom, and Cisco battle for market share, okay? Very key term in business, market share. Okay, market share is basically the total value of that industry, the total value of that industry. Let's go down and see what this article says here. Let's see if we can make that a little bit bigger. NVIDIA's dominance in the AI chip faces new challenges as Broadcom's processors and Cisco's networking tech enter the competition. The shift comes as companies search for more cost-effective ways to run AI systems. Broadcom has partnered with Google to design tensor processing units, okay, TPU, tensor processing units, that offer a cheaper alternative to NVIDIA's GPUs. UBS analyst forecasts Broadcom will ship around that many TPUs this year. The number is expected to rise more than 5 million next year. The price difference between the two chip types is substantial. TPUs sell for between $10,500 and $15,000. NVIDIA's latest Blackwell chips cost between $40 and $50 per unit. Okay, so big difference. TPUs between $10,500 and $15,000. NVIDIA's top of the line black chip between $40,000 and $50,000 per unit. Okay. Very key. So approximately four times as much. TPUs work especially well for AI inference, which is the process of generating answers from AI models. However, NVIDIA maintains an advantage in training AI models. According to benchmarks, training a model takes 35 to 50 days on NVIDIA GPUs, around 3 months on TPUs. Okay, so let's see here. Broadcom expects to generate around 60 billion. Okay, let's see where it talks about. Okay, here we go. Cisco enters the competition. Cisco Systems launch a new chip targeting the AI infrastructure market. The G300 switch chip will help AI training and delivery systems communicate across hundreds of thousands of connections. The chip is expected to go on sale in the second half of 2026. TSM will produce the chip using 3 nanometer technology. The chip includes new features designed to prevent networks from slowing down during large data traffic spikes. Cisco expects the chip to make some AI computing jobs 28% faster. The company focuses on improving total network efficiency rather than individual component speed. Okay. The networking field has become a key battleground in AI infrastructure. Everyone wants market share in AI infrastructure. When NVIDIA unveiled its newest systems last month, one of the 6 chips was a networking chip competing with Cisco products. Broadcom also competes in this space with its Tomahawk series of chips. Okay, so Cisco. Okay, Cisco is stepping up their competition with the big boys, NVIDIA and Broadcom. Okay, so Cisco. Okay, Cisco making moves. Cisco wants their market share. Cisco is competing. Okay, Cisco is competing. Do you guys own Cisco? Do you guys own Cisco? Do you guys own any Cisco stock? Do you guys own any Cisco stock? Let's see here. Maybe let me turn on the light here. Turn on the light. Okay, let's see here. All right, this is the first article I wanted to share. Cisco. Before we move on, let's take a look at the market. Here's a live look as of 12:09 p.m. Eastern. This is what the market's looking like. Okay, great day to get rich in America. Great day to build wealth in America. Let's see where we got. Broadcom, 339, almost 340. Bitcoin, 66,000. Google, 311. Microsoft, 402. Meta, 664. NVIDIA, 191. Tesla, what is Tesla on the bottom there? Let's see if we can see what Tesla is. Tesla's 423, TSM 374. Okay, TSM right there. We just talked about TSM. That article up 3% to 373, almost 374. Amazon pulled back after last week's earnings, currently at 202. Okay, currently at 202. And Apple at 278, $10 off their 52-week high. Okay, all right, so that's a live look at the market. Live look at the market. Okay, who do we got? We got Howard, my guy Howard. Shout out to Howard. Austin, Texas in the building. We got Garnell, peace to Garnell, Maryland in the building. And Faith, I think. Yep, Faith from Maryland, also Maryland. Okay, Maryland in the building. Maryland in the building. DMV in the building. DMV in the building. All right. All right, let's see what. Okay, so I got a couple things in my notes here I want to talk about. I want to go to the AI and ask. There's a couple events this week I wanted to talk about. Let's ask Copilot. I believe the jobs report comes out. I believe the CPI report comes out. Oop. Let's find out for sure. What are key events in the stock market this week? I believe the jobs report was it today? I think the jobs report came out today. Okay, that was morning. Expected gains about 5,500. Unemployment rate, okay. CPI, January CPI Friday, also delayed to the government shutdown. Okay, so that's Friday morning, January Consumer Price Index. Okay, so I thought it was coming out today, so it was actually Friday, it looks like. CPI report Friday, earnings, okay, a couple, I've got earnings I want to share. Coca-Cola, let's see, Spotify, I think was earlier today. Marriott. Okay, so I got an article I wanted to share on Marriott. Their CEO said something very interesting recently. I want to talk about that. Marriott, BP, and so forth. All right, so a few key catalysts this week. Potential catalysts. Okay. Jobs report today and CPI Friday. Okay, as well as the earnings. Okay, so a couple potential catalysts this week. All right, cool. I think the CPI comes out at 8:30 a.m. Eastern. 8:30. Actually, you know what? I'm gonna ask the AI what they expect. Let me go back to the AI. Let's ask the AI. What is the expected CPI data? See what it says. What is the expected CPI data? Expected about 2.5% year over year. Core CPI year over year, not explicitly forecasting the sources based on December's 2.7 year over year. All right. Cooling components. Okay, so they expect markets are bracing for a 2.5% year over year headline. We'll see what actually shakes out Friday morning. Okay, so that's later this week. 2.5 expected on the CPI this month. Okay. CPI Friday morning. Okay, before we get too deep into some other things, this past Sunday was the Super Bowl. Okay, this past Sunday was the Super Bowl. Did any of you watch the Super Bowl? Okay, back in the day, I used to follow the football more closely than I do nowadays. Nowadays, my favorite sport is not football. My favorite sport is business. Okay, so I wanted to actually talk about some of the business behind the Super Bowl. Okay, I wanted to talk about some of the business behind the Super Bowl, not football, the sport, the real sport, and that's business. All right, so let me go back to the AI. I wanted to talk about the business of the Super Bowl. Actually, I'm gonna share my Google. Let me see if I can pull up Google and share my Google. Okay, I want to talk about the business of the Super Bowl. Okay, the real sport, and that is business. All right, let's see here. Let's just search the business of the Super Bowl. Okay, Forbes Super Bowl viewership falls short of record. Let's check out that one from Forbes. Okay, I read too many. Maybe let's go try something else. Let's see here. I read this one, but I didn't have the access. Seahawks are Super Bowl champions, but I think their owner can't capitalize on that. Jody Allen, chairman of the Seahawks, worth an estimated $6 billion, and now league champions after a victory. Let's see here. NC State University, the Super Bowl's economic impact, big game, big money. Who knew? Time Magazine, the economics of the Super Bowl, by the numbers. Let's check out that one. Economics of the Super Bowl, okay? The real competition, the real sport. Okay, the real sport. Let's see what it says here. The Super Bowl is America's biggest and most watched sporting event, drawing in more than 100 million viewers in recent years. How many what's the population of the United States? 350 million? So 100 million viewers in recent years. Let's see what it says here. Beyond its massive global audience, the Super Bowl also serves as an economic engine. Who knew? Breaking news here on Winning Wednesday. The Super Bowl is an economic engine, okay? While we were distracted with yards after catch, the real competition is economics. Real competition is business. Check this. Generating enormous revenue in everything from ticket sales to concessions to hotel bookings, creating jobs and pouring money into state tax coffers. Okay, who knew? Generating enormous revenue in everything from ticket sales to concessions to hotel bookings, creating jobs and pouring money into state, okay? The real competition. Okay, let's talk about tourism. Let's see. Study from the Bay Area Host Committee estimated the event will generate between a whole lot and even more in earnings across the area. Okay, 300 to 630 million in what? 1 week? 90,000 visitors anticipated to come from outside the Bay Area. Okay, committee's calculation also includes money on teams playing in the game, expected to spend on housing, feeding, transportation, okay, and logistics. Okay. Jobs. Games year will also create around 5,000 jobs. Okay, a 4-hour game created 5,000 jobs. 4 hours, 5,000 jobs. Okay, across different industries. Estimate part of the broader economic impact in the area. The event will generate roughly 300 million in labor income. 300 million in labor income. Okay, the real competition is business, not football. Government earnings. Okay, you know Uncle Sam needs his cut. Another piece of the total earnings the host area is expected to reap from the game will go toward the state and local governments. Estimated from those governments, we'll see about 16 million in physical revenue. Okay, 4-hour game, 1 week roughly, everything included, 16 million in physical revenue. Much of the income and sales associated with the Super Bowl are subject to state and local taxes. Tax revenue from last year's game in NO reached a total of more than 80 million. 80 million. Okay, 80 million. How long was the Super Bowl? 4 hours, 80 million. Ticket sales. Okay, more than 60,000 football fans set to watch Sunday's big game in person. NFL will make close to 400 million in revenue. Okay, NFL 400 million in revenue off of one game. One game. Starting ticket prices around 6,000, but there are signs that suggest the prices are dropping. Current price of a pair of tickets are around 43. Okay, nosebleeds, you're getting in for 43. Sharp decrease. Okay, advertisements. Okay, you see where this is going. Payers playouts. Okay, betting. Okay, you know that's big money. Betting, halftime show, big money. Okay, all right, there you go. There you get a quick snapshot of the real economics of the Super Bowl. Okay, I don't even know which teams play. I don't even know who won. I don't care. I'm more interested in the business of the Super Bowl. I'm more interested in the business of Super Bowl. I'm not interested in the business of football. I'm interested in the real competition. I'm interested in the real competition, and that is the economics of the Super Bowl by the numbers. Okay, not according to me, according to time.com. Okay, check out this article on time.com. Okay, the business of the Super Bowl, the business of the Super Bowl. Okay, big business, mega business. Okay, mega business this past Sunday in the Bay Area. Super Bowl business, the business of the Super Bowl. Okay, what do you guys think about the business of the Super Bowl? The business of the Super Bowl. Football is one sport. The real sport is business. All right, so you guys can check out that on your own. Got a couple of dope YouTube shorts I wanted to share. Let's see if we can go to YouTube. Let's talk about some of these shorts right quick. Let's talk about, okay, this is CNBC's YouTube short business page. CNBC shorts page, I should say. Let's see what we got. This one I found interesting. Jamie Dimon looks like he's looking to retire. That's an interesting one right there. Let's see what's going on with him.
Helping it grow faster than rivals, avoiding disasters that befell other banks, picking up 3 failed institutions, and turning his firm into the world's largest bank by market cap. Today, JP Morgan Chase stock is worth around $900 billion, which is roughly the size of the next 3 largest American banks combined. With that kind of a track record, the world of finance listens to everything that Jamie Dimon says. But at nearly 70 years old, the issue of who replaces Dimon looms large in the background. The short list of executives who might replace him includes Marianne Lake, who leads the firm's biggest business, its giant consumer bank. She's also a former CFO of the company, and investors are said to be quite comfortable with her. Doug Petno and Troy Rohrbaugh, the 2 co-CEOs of the firm's commercial and investment bank, the Wall Street side of the business. Finally, other contenders include Mary Erdos, head of the Asset and Wealth Management Division, and CFO Jeremy Barnum.
Yeah, there are actually some really great potential CEOs here.
There's actually a good lesson right there. Look who the candidates are. Let me go back. Okay, so I thought okay, let me replay that.
Finally, other contenders include Mary Erdos, head of the Asset and Wealth Management Division, and CFO Jeremy Barnum.
Okay, there we go. Okay, so look at the candidates here. Co-CEO, 2 co-CEOs, the CEO of one branch, the CEO of another branch, and their CFO. Okay, I think Marianne Lake, they said, was a former CFO. So look, whether you like it or not, you're chief executive officer of something. You're also chief financial officer of something. Okay, so look who's 2 of those people are CFOs. So if you have CEO ambition, okay, make sure you know your numbers. Okay, make sure you're also chief. Whether you like it or not, you are also CFO. So if you're CFO and you have ambitions of being CEO, that increases your chances.
Yeah, there are actually some really great potential CEOs here.
Several of them are former or current CFOs. Okay, so interesting short from CNBC right there. Potential replacements for one of America's top executives, Jamie Dimon. All right, let's see what else we got. I think it might have been on Yahoo Finance's page that I saw some other interesting shorts. Let's see what else we got here. This is a nice one, good one here.
The AI lab that avoided the hype has suddenly found itself at the center of it.
Anthropic is one of the key AI names eyeing a potential IPO this year, and it's looking to outmaneuver big spending rivals by showing you don't need the most chips to win.
Anthropic's story began 5 years ago with the Defection, a core group of senior OpenAI researchers who helped build the systems that became ChatGPT, then left to create a lab where safety wasn't an afterthought.
We had this really clear vision of the company that we wanted to build. A technology company, developing transformative AI at the frontier, but with this very intense sort of focus on making the system safe and reliable.
No viral consumer product, no flashy demos, just quiet progress building for enterprises.
The Anthropic partnership is critical for us and very, very strategic.
Anthropic has always had a fraction of what our competitors have had in terms of compute and capital. And yet we've pretty consistently had the sort of most powerful, most performant models for the majority of the past several years.
It is a central player and the most expensive build out in a generation.
A major move in America's AI arms race today with Anthropic. It launched a $50 billion national infrastructure build-out plan.
Amazon's $11 billion AI data center in Indiana, one of the largest in the world, is now live.
Anthropic has really partnered with us. They saw the potential of that chip and has really kind of co-invested with us to jointly make that better.
But at the same time, Anthropic is warning the next milestone in artificial intelligence could come faster than anyone's ready for.
At some point, we're going to get to AI systems that are better than almost all humans at almost all tasks. The term
Let's rewind that last 10 seconds.
almost all humans.
Oop.
Have you
All
noticed?
right. Anyways, you can check out that article, the short on your own. I wanted to share a couple from Yahoo Finance right quick. I wanted to share a couple from Yahoo Finance. Let's see here. Let me stop. Let me pull it up and let's share that one. I think it was actually on Yahoo Finance or it was on Forbes that I saw some interesting shorts. Let's check out Yahoo Finance shorts. Okay, let's see what's going on here. Okay, jobs report this morning. Let's see what's going on.
We like this number. It's a great number. It's showing that the economy is strong, which we think it is. We're not entirely sure if the economy is accelerating, but it's strong.
I do still think that generally we're in a low fire environment. There was an expectation that you could see a little bit
Okay,
of
hold on. Pause for the cause. Pause. Okay. 82,000 in healthcare, 42 in social assistance, 33 in construction. Okay, those are some hot sectors right there. Okay, so let's check out some not so hot sectors.
There was an expectation.
Government. Okay, they're looking to replace you. Financial activities and information. Not so hot sectors.
Expectation that you could see a little bit of heat in the January number that could somewhat be related to seasonals.
Really what it's showing, especially if we look at the pattern of the revision, they actually started January 2025 with minus 48,000. Previously, it was reported to be positive 111,000. But then for all of 2025, it was just one shock after another. So
one shock after another. Not so shocking.
Didn't start the year quite as strong as what we thought we did in terms of the labor market. And then piling on top of that, all the uncertainty around, you had the tariffs and then you had the government shutdown. It was actually a surprisingly resilient labor market, right? We had good GDP numbers in the Q3, probably going to get a good Q4 GDP number. And that should hopefully pull the labor market along in its wake.
Okay, jobs report. Okay, so let's see what else we got here. Okay, this is a very interesting one here from Alphabet. I was watching this yesterday.
Yes, Google's parent company Alphabet is just tapping the bond market with a 100-year time frame. No joke, this bond is not going to mature until the year 2126. And the wild part is investors could not get enough of it. So Alphabet is raising about $32 billion across multiple bond deals in multiple currencies, and only a smallish part, 1 billion British pounds, is for 100 years. Now let's talk about who buys something like this. Some buyers, like pension funds and insurers, want steady payments for a very long time. Their promises to pay people last decades. So guess what? They like investments that last decades. Other buyers are just making a big clean bet on interest rates, hoping to buy low and sell high, or vice versa. And why would Google's parent company want to go into debt when they're neck deep in cash anyway? Because AI...
Okay, hold on. Let's pause it right there. Okay, let's rewind that 10 seconds and drop your answer in the chat. Drop your answer to the chat in this. Why would a company that has a mountain of cash want to go into debt? Drop your answer in the chat. Why would a company with a mountain of cash want to go into debt? Drop your answer in the chat. Why do you think? Why would a company with, a major stockpile in cash purposely go into debt? Drop your answer in the chat. Drop your answer in the chat. Why would a company want to go into debt? Why? Just to do it? Should we? I mean, Google's top 3 company in the world, top 2 company in the world. They obviously know what they're doing. Do you think it's by accident that they don't use their cash, but they purposely go into debt? Why would they purposely go into debt? Drop that answer in the chat. Drop that answer in the chat. Why would they purposely go into debt? Let's see why.
Their promises to pay people last decades. So guess what? They like investments that last decades. Other buyers are just making a big clean bet on interest rates, hoping to buy low and sell high or vice versa. And why would Google's parent company want to go into debt?
Pause right there. Why? Why would they want to go into debt if they have the cash? Why would they want to go into debt if they have the cash?
And why would Google's parent company want to go into debt?
Why? Drop your answer in the chat. Drop your answer in the chat. Drop your answer in the chat.
When they're neck deep in cash anyway?
Okay, what's the answer? What's the answer? Just by coincidence? Or do they know exactly what they're doing? Do you become a top 2, top 3 company in the world by coincidence? Or do they know exactly what they're doing? Drop your answer. Why would they want to go into debt? Let's see. Howard says, they see great potential opportunities, other people's money, i.e., okay. Other potential opportunities, okay. Other people's money, okay. What else? What else? Leverage, okay. But why take on the leverage? Just for no reason? Why? Why would we take on the leverage if we have the cash? Is there any specific reason, or is just hope, or do we just hope things work out? If I'm Google, if I'm the second most valuable company in the world, do I just do this on a whim, or do I do this based on some analysis? Okay, they know what they're doing. They definitely know what they're doing. You know, they definitely know what they're doing. Okay, my answer to that, why would they take on debt if they have the cash, is very simple. Very simple. It's simple mathematics. Just say the interest rate was 6%. I could keep my cash, take a loan against my collateral, my cash, happily pay the 6% interest when I know I'm going to earn 20% on the back end. Okay, if my revenue is 20% and my expense is 6%, I don't care about that. I live off that 14% difference. That's what I suspect. Okay, let's see what they say.
Deep in cash anyway, because AI is turning tech into a hugely expensive infrastructure build-out, and even cash-rich companies like to have cheap, flexible funding while rates are historically low.
There you go.
Yes, Google's parent company.
There you go. It's simple mathematics. Simple mathematics.
Infrastructure build-out, as AI is turning tech into a hugely expensive infrastructure build-out, and even cash-rich companies like to have cheap, flexible funding while rates are historically low.
Okay. All right. Very interesting YouTube short on Google. Okay. Google 100-year bond, issuing a 100-year bond. Google. All right. Let's see what else we got here. Let's see what we got here. This is an interesting one here. Former NFL player on avoiding a lifestyle creep. Oh, here we go. This is a good one here. Going back to the Super Bowl. The real competition.
The average cost for a Super Bowl ad in this year's Super Bowl in 2026 is around $7 to $8 million. That compares to $5 million back in 2016. And so we have seen increasing growth in the price of a Super Bowl ad. The Super Bowl audience is about 127 million viewers on you. And that idea of everybody being able to watch the same thing and see the same thing all at the same time. The average cost for a Super Bowl ad in this year's Super Bowl.
10 years, 2016 to 2026, went from 5 million to say 7.5 million. Okay, what is that? 150% increase. Okay, 10 years, 150% increase on the average cost of a Super Bowl ad. Okay, 150% increase in 10 years, if my math be mathin'. All right, okay. Some interesting shorts as usual from Yahoo Finance right there. Okay. All right. Okay, let's see what else we got. Okay. Before we continue, I got a article from Amazon on Amazon Meta, and I think it was Alphabet. Okay, a very interesting article on taxes. But before we get to that, let's see what we got here. If you want to book a consult with me, many of you meet with me for options. Many of you meet with me just for a second opinion on your business venture. Check me out at errolcmango.com. You can book a consult with me, a 1 hour, or you can check out some of the other services I provide right at my website, errolcmango.com. There is an expense, but I will provide more value than whatever expense you incur. All right, so check me out at errolcmango.com if that's of interest to you. All right, let me share that article I was just talking about. Actually, before we do that, let's check earnings right quick. Earnings right quick. Okay, earlier this week, what do we have? Coca-Cola yesterday, Robinhood. Okay, that was one I wanted to look. I forgot to look up Robinhood. I wanted to look up Robinhood. Lyft yesterday, Ford yesterday. What else? Today, Shopify this morning. McDonald's this morning. Cisco later today. Tomorrow after hours, probably the biggest name is Coinbase. I'm interested. Actually, DraftKings too. DraftKings and Coinbase tomorrow after hours. I'm interested in hearing what Armstrong has to say. Okay, I'm very interested in what Armstrong has to say. Coinbase had a very popular ad on Super Bowl Sunday. Friday, Moderna. Okay, so there's a quick overview on earnings this week. Biggest names on this list, probably Shopify, Coke, McDonald's. All right, so that's earnings this week. That is earnings this week. All right, let's talk about that article I saw from a few of those mega caps. Let's see here. Amazon, Meta, and Alphabet report. Let's see here. Amazon, Meta, and Alphabet report plunging tax bills thanks to AI investment and new rules in Washington. All right, let's see what this says here. Big tech titans seeing their tax bills plunge. The build-out of AI data centers, along with business-friendly provisions in Trump's One Big Beautiful Bill, are combining to make 2025 a banner tax year for big tech. Tax bills have dropped for 3 companies at the center of the ongoing AI build-out, thanks to the new business world deductions enacted last year for things like depreciation and research and development costs. All right, let's see what else. Some of the new provisions offer deferrals, meaning tax bills may be higher down the road, but the changes are set to add billions to these companies' bottom lines for now. So far this year, Amazon, Meta, and Alphabet have filed annual reports to the government and all reported significant drops in what they expect to pay in U.S. federal income taxes. Okay, Amazon's tax bill dropped from about $9 billion in 24 to, holy moly, to $1.2 billion in 2025. Imagine your tax bill going from $9 million to 1.2. What percentage decrease is that? For all my mathematicians, for all my statisticians, what percentage decrease is that? 9 to 1.2. Drop your answer in the chat. What percentage decrease is 9 to 1.2? In 1 year, imagine your expenses drop from 9 to 1.2. Likewise, Meta reported a year-over-year drop of about 9.6 to 2.8. What percentage decrease is that? Annual report from Alphabet, meanwhile, reported a tally that combined U.S. federal and state totals that showed a drop from about 21.1 to 13.8. What percentage decrease is that? These dropping tax bills for 25 also came as all 3 companies report profits are on the rise. Imagine that. Imagine that. Imagine that. Your revenue is increasing, but your expenses are decreasing. The ideal case. Your revenues increase, but your expenses decrease. The ideal case. Amazon's domestic profits jumped nearly 90. Okay, you can read through those. Okay, it's a whole bunch of increase in revenue jump. Some appear to be prepping for criticism. Dropping tax bills is an issue that has long inflamed anti-tech sentiments. Amazon got welcome notice in 2018 when it paid zero in federal taxes. Me and you probably paid more. This time it has offered a lengthy statement to explain that it is simply playing by the new rules. Last year, Congress made changes to the tax code to encourage greater investment in the American economy. Okay, not so breaking news. Not so breaking news. Meta CFO added that Meta is seeing substantial cash tax savings from the new U.S. tax laws. Okay, no big surprise, given significant investments that we're making in infrastructure and R&D. Okay, no big surprise, no big surprise. Okay, very interesting article though from Yahoo Finance. Okay, not so breaking news here on Winning Wednesday. Okay, what do you guys think about that? What are you guys thinking about that? What are you guys thinking about that? All right, let's check. I want to check Market Watch headlines. I saw an interesting headline from Market Watch earlier. Let's see if I can find it. Let's see if I can find it. "20 stocks of companies that delivered a double dose of growth this earnings season." Let's check that. Companies in the S&P achieving double-digit sales growth while improving profit margins. Okay, we talked about profit margin. Arguably the most important metric in business, profit margin. Arguably the most important metric in business, profit margin measures. Someone drop what profit margin measures in this chat. What does profit margin measure? What does profit margin measure? What does profit margin measure? Two things that it measures. What is it? What are those two things? Okay, if you're a business owner, you better know your profit margin. Okay, if you're a business owner, you better know your profit margin. Arguably the most important metric in business. Profit margin is a measure of what? Efficiency and profitability. Efficiency and profitability. We like business ventures that are both efficient and profitable, not just efficient, not just profitable, but both at the same time. Okay, some of our business ventures are efficient but not profitable. Some of our ventures are profitable but not efficient. We want our ventures to be both efficient and profitable. Okay, just ask Palantir, just ask Micron, just ask Boeing, just ask Alphabet. Okay, don't believe me? There's the proof right there. All right, let's see what this article says. Let's see what this article says. Each earnings season, most companies report earnings per share that exceed the consensus. Let's see here. Let's see if it'll let us. So we have screened the S&P for companies showing the greatest increase in revenue per share this earnings season, while also expanding the two profit margins. Okay, I guess I can't read this article. Okay. Here's a takeaway from this article. Know your profit margin. Know your profit margin. Okay, know your profit margin. Very important. Very important. Okay, that's Market Watch headline right there. Let's see what else we got. Lyft stock tumbles as rider numbers and revenue suffer big misses. Crypto caution weighs on Robinhood sales. Okay, maybe we check out Robinhood. Let's check out Robinhood. See if we can read this one. Okay, down 12% today. Down 12% today. Caution on crypto trading weighed on Robinhood's fourth quarter sales and stock, but executives at the trading app downplayed the impact and talked up the prospect of a super cycle in the prediction markets that allow its users to bet on things like sports, politics. I thought I was looking at Robinhood the other day. I thought you can make a bet on the weather. Okay, you can probably bet on everything. Okay, Robinhood down 12%. Down 12%. Okay, that's a live look at Market Watch. Let's check out Yahoo Finance. Let's check out headlines on Yahoo Finance. Jobs report smashes expectations as payrolls grow by 130,000. Bitcoin whales are on the buying spree as other traders retreat. Bloomberg. McDonald's expected to report another jump in U.S. sales. Robinhood stock plummets after revenue miss. 25-year-old founder raises $220 million for AI chips to take on NVIDIA. I wonder if I can look up Marriott CEO. Yeah, here we go. Here's the article I saw. Marriott CEO, we are seeing a K-shaped economy. Let's check out that article. The economy resembles a dual-track highway as seen through the prism of hotel giant Marriott, ticker symbol MAR. I mean, there is certainly, pick your description, a K-shaped economic bifurcation of the consumer. We continue to see really consistent strength across luxury for the full year. He added that it seems like Marriott's business is firing on all cylinders, pointing to a lot of new hotels being built. Okay. All right. Let's see here. Stock popped as investors cheered a likely big boost from profits. Marriott stock is up 14% in 6 weeks. All right. You can check out this article on your own. Currently 362.36 right there. All right, Marriott. All right, let's see what else we got. All right, let's see what else we got here. Let's check on Bloomberg article. Let's see here. Bitcoin has just drawn fresh support from some of its largest holders, though the return of demand remains narrow enough to raise doubts about whether it marks a recovery or a mere damage control. The so-called whale wallets accumulated about 53,000 coins in the past week, their biggest buying spree since November, after weeks of heavy selling. Those kinds of purchases helped steady prices after a steep drawdown, even as most investors stayed on the sidelines. Okay, data from industry research firm Glassnode showed that the wallets holding more than 1,000 Bitcoin added more than $4 billion worth of the token over the period, interrupting months of divestment that have left Bitcoin roughly 40% below its October peak. It does slow down any downfall. That caveat matters. While large holders have stepped back in, the broader trend still points to caution. Excluding ETFs and exchanges, large Bitcoin holder players have been net sellers over the past year, with more than 170,000 coins worth $11 billion leaving those wallets. Are you guys buying Bitcoin? Are you guys buying Bitcoin at 68, I think 66, 68,000? When the storm clears, we'll be buying again, as we sold some before the end of last year, but we're still in a storm now. Are you guys buying Bitcoin? Current price is 66.5, 66.5, 66,500 per coin. You guys buying Bitcoin? I bought some Bitcoin today myself. My guy Garnell says yes. Garnell is buying Bitcoin. All right, let's see what else we got. All right, let me go back to Google. Let me look up a ticker I forgot to look up earlier. And that is one we just talked about. Hood. Okay, currently 75.22. Not so long ago, it was like 120, 130. Let's see here. 152 back in October, 136 November, 132 December, and since December, it's really dropped down. Okay, current price 75.20. Do you guys like Hood? Ticker symbol on the NASDAQ, HOOD. 52-week high, 153. 52-week low, 29.66. 52-week low, 30. All time. Okay, so it's pulled back a lot. It's pulled back a lot. There's its all-time chart right there. Robinhood Q4 revenue misses estimates, but earnings beat. Stocks making the biggest moves in after hours. Robinhood, Lyft, Ford Motors. Okay, Hood. All right, let's check out CNBC. Let's check some headlines on CNBC.com. Live look at CNBC. Stocks making the biggest moves. Acadia Healthcare, Moderna. Prediction markets head into basketball season on a high from Super Bowl. Good news for tickers like Hood. Lyft CEO says consumer showing no softness as stock slides 15%. Shopify stocks drops despite revenue beat, $2 billion in buybacks. The world's rich are relocating at a pace unseen in history. Where are they going? Let's see where they're going. Asia. Okay, I read too many free articles. I read too much. Bitcoin bounce fades as it hovers near around 66. Okay, some other headlines there too. Okay, you can check that out on your own. CNBC, good financial resource. All right. Let's see here. Let's see. Let's check some comments right here. I believe BTC is on sale. Sheila says BTC is on sale. Andrea Hood should have bought it over a year ago. Okay, what it went from 30 to 150, something like that. Howard says, I bought some more Hood. Expect a future comeback by the dips. Dr. B words. Okay. Howard's buying the dip on Hood. I think Hood has a good options market. You might want to check their premiums, see what kind of return they provide. See if that's worth your time, effort, and capital. Let's see what else I got for you. What else do I got for you? Okay, in terms of scheduling. Oh, I forgot this. In terms of scheduling, I got an interview tomorrow night. Let me stop sharing that one. Let me show you what I'm talking about. I got an interview with Aisha Verzi tomorrow night. Let's see here. Okay, let's see if I can find the page here. Those of you that follow the Financial Juneteenth website on YouTube. Oh, sorry. I don't know what I just did. Okay, let me go back. Okay, that's right there actually on the bottom. Tomorrow night, any of you interested? I've got an interview with Aisha Verzi tomorrow night, 8:30 p.m. Eastern. If you guys want to check that out, we'll talk some business. We'll talk some insurance. We'll talk. We'll have a free-flowing conversation with Aisha Verzi tomorrow night on the Financial Juneteenth website, 8:30 p.m. Eastern. Financial Juneteenth YouTube Live. So any of you interested, check us out tomorrow night, 8:30 p.m. Eastern. All right. What else we got? What else I got for you? Let's take a look, before we wrap, let's take a look at, let me pull up Google right quick. Major indexes. Give me the price. I want the price. Price. Okay, here we go. Let me share my screen here. Major index prices, here we go. Let me make that a little bit bigger. Dow Jones just hit a new record high a couple of days ago. Dow Jones at 50,188. S&P 6941. NASDAQ Composite 23,102. Russell 2646. Chicago Board of Options Exchange Volatility, the VIX at about 18, approximately 18. And then some international indexes, okay? Dow Jones 50,188, S&P 6941, NASDAQ 23,102, Russell 2,026.46, and the VIX about 18. That's where we stand in terms of the major U.S. indexes. Showed a mixed performance with the Dow Jones around that, S&P around that. Okay. The market saw slight volatility with tech-heavy indices lagging behind industrials. Let's check CNN Business. Let's check some CNN Business headlines. CNN Business right here. Let's see what we got. Check CNN Business. All right, let's see if we've got any interesting headlines on CNN Business. Americans might finally be buckling under the weight of rising debt and slowing wage growth. McDonald's is offering free caviar for Valentine's Day. My experience in America, ain't nothing free. Ain't nothing free in America except two things. Neither of those two things being caviar. Okay, my experience in America, only two things are free. Neither of them being caviar. Okay, those two things that are free in America, from my experience, are racism and discrimination. Everything else, your ass got to pay for. Let's see what else we got here. Okay, what else we got? U.S. economy added. Okay, we've talked about that. Talked about this too. Google issued a rare 100-year bond. All right, so let's headlines from CNN Business. Just talked about the indexes here. All right. All right, let's see. Let's check any comments. If you got any final comments, drop them in the chat. We can review them. Yeah, thanks, my guy Garnell. Shout out to Garnell. Yeah, hit the thumbs up button. Hit the thumbs up button. It don't cost you nothing to hit the like button. It don't cost you nothing. Hitting the like button fits into everyone's budget. Hitting the like button fits into everyone's budget. All right, what else we got? What else we got? Bought some hood. Okay. All right, 1 p.m. Eastern. I'm gonna check you out next week, Wednesday, noon Eastern. We'll review other news in the financial markets. Until then, go get what you deserve. Go get what you deserve. Stay patient, stay disciplined, and go get what you deserve. I'm gonna check you out next Wednesday. Peace.